Hey. Good afternoon, everybody. We'll wait a couple minutes before we get started. No rush. All righty. Hope everybody's doing well. Again, we'll wait just a few minutes before we get started. Let me make sure that mute all is selected. And let me make sure that we are recording. All right. Perfect. Yeah, we'll give a few minutes to allow people to trickle in. But yeah, a really great trading day. I sent out that note this morning, right? And somebody asked me yesterday, hey, when are we going to do... Oh, sorry, my sister texted me. Make sure she's okay. Okay, my sister's all good. But I talked to somebody in the chat yesterday, in the mastermind chat, who asked about when this bonus lesson was going to take place. And it's tricky because I wanted to make sure you want to like plan it in advance, but then I also wanted to make sure that it was like a day worth of reviewing, right? And on some level, when we initially announced it, I did think that the market had a chance to have a day that would be worth reviewing. And it in and of itself really isn't worth all that much review, in my opinion, although we can start to identify some potential chop signs, so to speak, right? But there was a very great individual name that had a strong trend, and that was in CRM, right? So the nice part about this particular lesson is that we'll be able to cover a little bit of ES in the opening action of how that went, how it was moving from an individual candle perspective. And then we'll also be able to dive into CRM a little bit that had a little bit more of a clean trend, right? So we'll be able to talk a little bit about individual candle analysis on something that was stuck in a range and essentially a chop consolidation day. And then we will also talk about something that was in a little bit of a trend, right? So this lesson will go, or this bonus lesson will be same format as all of our previous lessons for those who are in Mastermind 8 and are curious. It's essentially the same thing. I'm not going to check the chat box except the first, I'm going to ask one question, an interactive question to start it off, but I'm not going to check the chat box throughout. I have Ron G on. I made sure that we had someone available, and Ron G is on. So thank you so much for being on, Ron. He will be able to answer any questions as if I were to answer them. What I would say is these types of recordings, I think, are best if you try not to soak yourself in questions and understand every little detail right off the bat, right? This is a recording that is probably going to benefit you to rewatch, right? So don't hesitate to kind of soak it all in, as opposed to trying to ask about each little specific detail, right? However, the nice part about these bar by bar lessons and these bonus lessons is that I teach you everything I know in those 8 lessons, right? From a structural perspective of here's how we trade, here's the things that we look for, here's our 4 checklists, here's how we choose in options, here's how we manage risk, everything, right? However, there are some things that I can't necessarily teach just because it's like they've been seared into my brain for me watching charts for so long, right? And these bar by bar lessons help kind of bridge that gap, so to speak, right? So first things first, let's go ahead and get started. We are first going to look at the first trade of the day, which was the ES, right? So pre-market, we were getting a bit of a gap down, right? A small little gap down, but just to keep it relative, right? From Friday's open, we were still up big time, right? We still were fighting into a green bar. And the reason that's important is that on the daily chart, even though we were getting a gap down, we were still inside this big green bar, which meant that shorts weren't like super appealing to me, right? Like first of all, the market itself wasn't super appealing to me. And I did think that below 41.33, there was potential to short, right? But given everything, I wasn't super eager to short this market. I thought personally that if there was going to be a tradable opportunity that presented itself in the SPY today, it was probably going to be something where we hold support and then we get like a 1, 2, 3 pattern to the upside, right? So that was the potential idea that I was looking for in the SPY. Otherwise, I was going to remain relatively hands-off unless we got a firm break, and this chart will look a little different because it has extended hours on it. But unless we got a firm break beneath that 41.33, which if we did, shorts were on the table. That was part of the pre-market plan, right? But in the event that we didn't, right, I was more looking for that level to potentially hold and longs from there, right? So the market opens up. We come into the day with the 41.33 as our reference point, right? We can also see that we have a pre-market low essentially right there, right? Essentially right at the level, right? So first thing coming into the day, there are a few relative strength names on watch. Microsoft's on watch, Google's on watch, CRM is on watch, and then PayPal is on watch to the short side, right? So the market opens up and we have this very first 5-minute candle of the day, right? Now, I would say that the quote unquote safest, right? Safest long entry on this market in this move overall, right? If we're devising a pre-market plan, right? Pre-market plan, 41.33.50 reference point, daily 1, 2, 3. Really, I'm going to say it's make or break at level, right? Like it really is a make or break at level type of situation because beneath there we have room to the downside. If the level holds, we have room for that daily 1, 2, 3 pattern, right? So we get this market open. We get this initial slam down beneath the level, right? Now, the safest entry, right, so to speak, for longs, in my opinion, let's mark it here. Safest entry for longs. Spike under 41.33.50. It's back over opening print. Uptrend. Buy setup. Right? In a perfect world, if we were looking for longs, based on everything that you know that I've taught you, whether you're a Mastermind 1 or Mastermind 8 student, it will be the same, right? Everything that I've taught you over the course of the last however long it's been, right? I would hope that everybody has somewhat of an understanding or is relatively clear on why the safest entry for longs on the market overall today would have been this description, right? We spike under the level, right? Or we don't necessarily have to spike under it. It could have just, if we just tapped the level, that would have been fine too, but right? But the level trades, knowing that markets move from level to level, right? Then we get back over the opening print, which is something that we like in all of our long-sided trades. It's not a requirement, but it is something that we definitely prefer. If you have been struggling lately, and some of the things that you've been struggling with is counter trend trades, then I definitely would make that first rule that longs above opening print, shorts below, right? Then we would want it to get back into an uptrend, knowing that we like to trade with the trend. And then, of course, if it got into an uptrend, from there, we'd be looking for a buy setup, right? So initially, we see this first 5-minute candle of the day spike under the level, right? Now, given the fact that this was spiking under the level as well as this pre-market low here, right? The safest entry for longs was as described up there. The entry that I ended up taking on this one, and I'm actually totally fine with my entry. It was a little bit on the early entry side, but for me, I really liked the potential for that daily 1, 2, 3 pattern. So I was okay taking a early entry as long as my stop was tight, which in this case it was, right? So for me, what I did is it definitely was not a buy setup, right? But I ended up taking my first entry as we got back over the level here, right? On this 2-minute chart here. Now, what I will say for sure is that in hindsight, again, I'm okay with my entry, but it probably was very aggressive. And I think that there was a safer way to play it, even if you were going to play it under the opening print, right? So that's on the 2-minute chart over there. Let's gonna go through and we're gonna stick mostly to the 5-minute throughout the course of this lesson in this video, right? But initially we have this first 5-minute spike under the level that then gets back above the level, right? Within that 5-minute spike, we have the 2-minute break above previous bar's high. that gives me a signal bar and entry bar that I use to enter that trade. Now, the second 5-minute candle of the day, it's kind of hard to see here, but I'm curious. This is the part where I knew I wanted to ask a question to some people. If you had to assign reason to it, which you don't have to, and I don't necessarily think that you always should, but if you had to assign reason and rationale and explain to somebody why this candle, this second 5-minute candle of the day occurred, what would be your answer? Why did we have the second 5-minute candle of the day? The first one spikes under the level, then gets back above. What happens throughout the process and the duration of that second 5-minute candle? We've had 3 answers so far, 4. I'm looking for about 5, 10, 7, 8, 9 more. I'm looking for a few more. Even if you think the person above you got it, even if you have no idea, what was the purpose of this 5-minute candle, so to speak? All right, now let me check them. Seller exhaustion, test of the level, not sure, indecision, failure to go level, lower, inside bar. Okay, none of you are inherently wrong, but none of you answered so far with the question that I'm looking for, right? Ron, I'm curious, do you have an idea? I'd hate to put you on the spot in case that you end up not answering this correctly, because I might have phrased this question poorly, but throw your answers, and I'm curious. This second 5-minute candle of the day, what was the point of it? Somebody just started to get it a little bit, and somebody then just got it in reverse. All right, so let's go ahead and break it down. This first 5-minute candle of the day spikes under the level, then gets back above, right? Now, this, in my opinion, a little bit unrelated to the answer, right? But an answer, ding, 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 Osborne. And I'm sure Ranji knew as well. But I didn't see all the answers that came through, but I know some of you definitely got it right. But given that we had essentially a relatively large bear flag pre-market, a quick spike under the level may not have been enough proof, so to speak, to buyers on a 5-minute chart that we could have just immediately raced back above, right? And gotten back above. That was some heavy consolidation to the downside. It's not surprising for us to think that, maybe the market might need to either consolidate or digest this move a little bit more before it starts to make a move up, right? Now, the real answer that I was personally looking for, right? And again, none of you were necessarily inherently wrong. It was just, maybe it was the way I phrased the question too. But this 5-minute candle, I asked, what was the point of it? What was the purpose, right? On this 5-minute candle, we end up getting an inside bar. Why? If you flip over to the 2-minute chart, and again, we're going to stick mostly to the 5 on this particular lesson, right? But within this 5-minute inside bar, you can see that the 2-minute actually gets a higher low, right? The 2-minute chart here actually gets a higher low. So if you're somebody who's recently taken the program and you have not been watching all the time frames in conjunction with each other for whatever reason, this should be a reminder to always be watching them together, right? Because this was personally the thought process that was happening exactly through my head. As I was watching this trade, I was thinking, okay, I'm going to hold as long as we hold this previous low here. All right, we got to rally up. All right, we're consolidating a little bit. All right, let's see. It seems like we're going to maybe pull back. Are we going to set a higher low, or are we going to break through? And is this going to act as a lower high, right? So essentially, we're looking at an early 2-minute trend flip. So just a couple of minutes ago, I mentioned how I took an early entry, and even looking for an entry beneath the opening print, there technically was a safer one, so to speak, because this 2-minute higher low would have been a more with trend trade, right? That would have allowed us to have at least on a 2-minute chart, it would have been with the trend. Now, you still would have been fighting a little bit of the 5-minute and 15-minute. The daily, I think you still would have been with the trend. I believe the daily, whilst in a range, favored longs today, right? But for that particular question of asking you, why did this 5-minute bar kind of put in the candle that it did, right? In my opinion, it did that so that the 2-minute chart over here could get that higher low, right? Once it had that higher low, it added a little bit of extra layers of confirmation to the trade, right? Now, I don't really want to go through. I've already posted the trade review on SPY, all that. The point of this isn't to review the trade that I took on SPY, because I honestly, like I said, it turned out to be a nothing burger, right? I got in, we got these pops. I ended up closing as the 5 minutes started to look like it could have failed, right? You can see here, and it's kind of really tight and zoomed in. But the 5 minute here, we popped up. We got these two upper wicks. This started to look like it could fail, and we were triggering what ultimately would have been a 5 minute sell setup, right? This is still a downtrend at this point. So once we got that, I was like, you know what? I'm just going to close my position. No harm, no foul. Even though we were above the opening print, so I probably could have given it a little bit more room. Whatever. My point of this whole bar by bar lesson is not to talk about the ES and ES or SPY trade, or even the CRM trade. I don't want to necessarily make them about the trades that I took. I want to make it about what was happening on the chart at that time, right? So let me switch this style to an intraday. I want to see if we get a little bit of better view on these candles. So the first move that we have of the day, right, is that, so again, let's kind of go through. There we go. All right, so we have candle one of the day. Bar one acts like a sort of digestion bar, right? So this is actually a candle. While I want to make the note, right, that this gap, the gap down, even though we were at a support level, the gap itself isn't the most appealing gap, given the fact that we're gapping down to a level. But if we were to envision this chart, this 5 minute chart, or at least the first candle of this chart, on a different daily chart, right, where we maybe had a gap over a level, right, where the previous day was down here and we were gapping over a level, this first 5 minute bar of the day is definitely a common digestion bar. It's the kind of candle, right, where we open up, we kind of push beneath the level and push back above, and really on gaps up, right, you will see this as a definite long opportunity once we get back over the opening print, right? So in the way that I like to think about this and look at this, and again, this is one of those things that it doesn't make like fit in me teaching it in a course, but it does because it's subjective. It's not like something that like is a rule that we follow, right? But one thing that I personally, one like piece of knowledge, but like one piece of knowledge that I would say that I've had is that if you were to think about, like, again, I want you to envision that this chart right here, this initial opening that we're getting, is coming after a gap up, right? Again, today it was coming after a gap down, but envision it's coming after a gap up, and we're gapping over a level, and we are looking for a pullback to that level that holds, right? The reason in my head why I believe these first 5 minute candle of the day, this first so-called digestion bar, does what it does, right? Take us a little bit of a step back, I guess, from our first question. The reason I believe it does what it does is, right, is if you have people who swung trade that name, right, if you had people who were in that trade from the day before, right, the gap over the level, right, and this gap up, it wouldn't shock us if we initially had some people sort of taking profit at the open, right, which kind of pushes it down a little bit. The market, or this name, kind of tries to sell off, tries to go lower, but us having the system that we have kind of looks at that level in place as something to hold, right? So here in the first bar of the day, we have that digestion bar. Bar two, we have that inside bar that for us acts as a higher low on the 2 minute chart, right? Bar three is where we have our first pivot, right? So in bar three, we have our first pivot where we stop and we break above a previous candle's high, essentially turning, pivoting, and starting to go the other direction, right? So you could have had aggressive longs buying once we got over the opening print and keeping your stop beneath the low of the day. I think you could have, right? In theory, I think that longs over the opening print, just buying on a break over the opening print, right, which would have been on the 2 minute chart right over here, right, with a stop beneath low of day, I wouldn't have like been too upset with you if you took that trade. However, like we talked about here, right, the safest pre-market plan, the safest entry, so to speak, would have been wait to get back over the level, back over the opening print, and then wait for it to develop that uptrend so that we can take a buy setup, right? So we have bar three that essentially pushes up, gets back above the open, and gives us that spike higher, right? Now, it's important to note on that spike higher, on bar 3 and then subsequently bar 4 of the day, right? And subsequently bar 4 of the day, we get a spike higher, but what do we not take out? We don't take out, it's not the pre-market highs because those are all the way up here. But again, there's no real formal name for this, but like the pre-market bear flag, the upper end of that range, right? Like the highs up there, right? It's important to note that in both bar 3 and bar 4, we do not take out that range, right? So now let me take you back to the chart. I want to get that out of the, it looks a lot cleaner without extended hours when we're doing a deep dive. All right, so then we have bar 5 of the day, which comes back, and this actually does a variety of different things. Now, again, I would love a few different answers on this one, right? But bar 5 of the day, what does that do for us? What does that tell us? What information can we glean from this red bar right here and what it does based on a 5-minute chart and a 2-minute chart? Let's start with the 5-minute, right? 5-minute is the failed sell setup. Right. And we don't necessarily know it's going to fail during red bar 5, right? We just know that during bar 5, we do trigger a sell setup, right? So this would be at the moment, just at bar 5, before, again, let's pretend we don't see bar 6 yet, which is that big green bar, right? So bar 4 is the inside bar. Bar 5 is the one here that triggers the sell. Right, so the 5-minute chart there triggers a sell, right? Now, what would have been a clue or two that the 5-minute chart was, or excuse me, that most of you all got that all right away. You were able to pick up that the 5-minute chart triggered a sell, right? Now, we don't know when that sell triggers, whether it's going to fail or hold. We have no fucking clue. We know that buy and sell setups are the way markets move, right? Especially going from one level to the next, right? But we don't know whether that 5-minute sell is going to fail or whether it's going to hold and get continuation, right? However, we can start to pick up other pieces of information based on everything that you know, is particularly multi-time frame analysis and levels, right? That can give us some clues. So what would be 2 clues, and this is the most interactive of the bar by bar ones we've done for sure, but what would be 2 clues, right? 2 clues, or fuck it, 3 clues. Give me 3 clues that this 5-minute sell, we were looking for it to potentially fail, right? What would be 3 different clues that we could have gleaned from stuff that we already talked about in today's lesson? Test of opening print, 2-minute potential high or low, 2-minute is uptrend. Exactly. Right? You all are on it, right? And if you didn't get all of them or it's not clear to you, don't worry. We're going to go through each one here right now, right? 3 clues that this could fail the sell. 1, above opening print. Right? Above the opening print, I would say that is that a confirmed in and of itself? Is that enough in a vacuum? No. But as one of our potential clues that we are identifying, right? As one of the clues, right? Above the opening print would lead me more to believe that we were going to fail that sell, right? So the second one, right, would be 2-minute is in uptrend. Could be pullback. Right, so first is that this 5-minute sell occurs above the opening print. Second is that this 5-minute sell is coming when the 2-minute is actually in an uptrend. Could be a pullback. Now, the third one successful test of the level, right? We did have a successful test of the level down here earlier. And actually, it's not that breaking beneath it wasn't the strongest reaction, but this was a decent reaction, right? Like we just set a 2-minute higher low than got back above. So it wasn't like it wasn't the strongest reaction in the world, but it also wasn't a very weak reaction, right? So I would call it a successful test of the level, right? So bar 5 triggers that 5-minute sell, right? But we do get some clues, right? We do get some clues, right? That sell is going to fail. On the 2-minute chart here, we actually end up getting a very nice failure to go lower plus 2-minute buy setup that actually ends up offering a long opportunity in the SPY, right? Where you could have then taken the potential higher low and caught in a scalp on this move, right? So in hindsight, I wish that I had held my trade for it. But again, the point of this video is not to cover that trade, right? So I would say that while the 5-minute chart here was indicating a potential sell, I would have been more looking for that sell to fail based on these 3 clues, right? From there, we have a strong push up in bar 6, right? Now, bar 7 is something that I think it's important to note what happens. Can anybody tell me what they think might be an important note based on what we see in bar 7? And I'm looking for something a little bit specific here. A lot of you might say failure to go higher. You're not wrong, but give me the details. Right, right. We couldn't break above our pre-market highs there. Right? Not pre-market highs, but this box range, right? It was essentially a failure to go higher over that range, right? Now, that isn't super surprising, right? That isn't super shocking. Like we talked about earlier, this was a pretty bearish, like a pretty weighted bear flag, right? So while the spike underneath and the pullback could have been enough to get a break above along with the daily chart 1, 2, 3 and get that continuation up, it's also not super surprising to me that we've failed and rejected this area, right? So knowing that that box is from there, right? So I'm going to drag that a little bit just so it comes in to us when we remove extended hours in just a second. All right, this box here representing that pre-market kind of high area, right? Also similarly representing kind of this yesterday's low area as a whole, right? So we get bar 6, bar 7. What is one other clue? And again, I don't necessarily expect people to know this or get this right off the bat. This is one of those things that I think is kind of inherently, you know, a screen time thing. But what would be one clue, so to speak, that bar 7 gives us? Now, we've already talked about how it failed pre-market highs and then and that was a potential failure to go higher. We understand how that gives, but what's a clue that you could have taken away from the trading day as a whole based off of bar 7? Couple more answers. Give me a couple more answers. Range was set, choppy range day. Boom, exactly. Boom, boom, boom. Right? Does that mean that there is no good available trades for the rest of the day on the SPY? No, not necessarily. We could have pulled back and held and then trended. And hey, if we held the opening print a little bit better, I think that trend would have had even more reason, right? But that was the sign, in my opinion, that a choppy day was there and potentially ready to ensue. And given the action that we were seeing, knowing that CPI is coming tomorrow, right? Knowing that we wasted already like an hour of life trying to see what this chart would do, right? From there, I'm a little bit more hands-off, right? However, one thing that I note continuously is 41.3350s, right? The level, right? It looks like to me by bar 7 that the range has kind of been set on the day. We spiked beneath the level. It looks like the level is going to hold, but we also failed those pre-market highs. And let me see if I can zoom out. So let me see. I'm going to mark here. Bar 7 had valid reason to go higher. Failed wide A low, failed pre-market box high. Right? Right? Signs of potential range chop day come from bar 7. Right? So let me screenshot this. And I'm going to post this in text lessons of the Discord, because I think that is a great chart, right? But by bar 7 of the day, I'm not very interested in trading SPY anymore. I think the range has kind of been set, right? So for me, the only thing that would have interested me in SPY later on that day, I'm not like a range trader, so I don't really care to try and buy dips here and sell them here, right? However, I did mention in the pre-market plan, especially after maybe a failure to go higher, right, that I would have been open to shorting beneath 41.3350s, right? Now, just like we talked about, the safest entry for longs would have been a spike under, gets back above, then an uptrend and a buy setup. The safest entry for shorts, similarly, would have been a downtrend underneath this level in which you can take a sell setup. We did get spikes under the level, but we never got a downtrend underneath it. So I wouldn't have really been interested, given all of the clues that we had of a range day, I wouldn't really be interested in trying to short this unless we had gotten a clean breakdown and then some sort of sell setup, right? Here, there is technically sell setups, but like, I mean, this is range chop bullshit, my friends. Like this is fuck around, find out type of action, right? There's no clean trend developed. Right. So by bar 7 of the day, ES is off watch for me. It's not really of interest. Right. However, I did have 41.33 marked, not only because I was open-minded to shorting beneath it, but if that level broke and we started to sell off aggressively, I would have also no longer been interested in relative strength longs. As long as that level held and the market was holding support, right, which we know it is, daily has that 1, 2, 3 in place, whether it breaks out or not, it has it in place. And the market is holding support, which means that in my head, it is valid to be looking for names that have relative strength longs for potential upside moves. That's where CRM came into play. All right. So CRM was on watch for us for a variety of reasons, right? Again, not going to go through these too much in depth just because it was all in the trade review, right? That's posted for all, right? We have this gorgeous weekly flag with 2 lower wicks, right? A weekly bull flag, right? We then have a daily bull flag that is, and a daily 1, 2, 3 pattern playing out, right? We have a knock rule in place, right? Like we have a lot of things lining up in favor to the upside on this trade, right? So for me, the ideal situation that I wanted is I wanted this while the market spiked under level. I wanted us to quickly spike under or test this lower level here. That's what I was waiting for to put on actual size on this trade. And it would have been a decent size, right? Instead, I think for our first 2-minute, our first entry, potential entry of the day, right? So we zoom in here for bar 1 on the 5-minute chart. Right, bar 1 on the 5-minute chart, we have this super strong green bar. Right? For me, bar 1 on the 2-minute actually represented where I took my first entry. Once we got a strong close over the level, essentially a giant green trend bar, I bought a couple of 200 calls with some pretty small size, but I got a couple just in case of a runaway, right? Willing to add to that position if we came back and tested the level here or came back and tested this one, right? But I got a little bit of a starter size on there, right? And there. That's where I think the first potential entry of the day was. And again, that's an aggressive entry, right? There's a reason I don't think I necessarily signaled that one. It's aggressive for sure, knowing that the market's pulling back into a level, and it would actually make more sense if this would also pull back into a level, right? So bar 1 on the day, right, is this first strong green trend bar, right? So we talked about a second ago the signs of a potential chop day, right? We're losing people slowly but surely. We went from 115 to 100. Where are you guys going? Although I guess it might be lunch hour for people and stuff. Right. So one sign of a trend day, and this is straight out of Al Brooks, right? And I'm assuming as my mastermind students, all of you have read or attempted to read Reading Price Charts Bar by Bar. If you have not, I highly recommend 2 different things. One, somebody, I forget who it was because I spoke to so many people at RateCon. I think it was Danny, who recommended to me that listening to the audiobook while reading it was super helpful for him. So maybe try doing that if you couldn't get through the book. Also, Buffalo Chuck, Rake Trade's Mastermind 5 student. I literally would never in my heart or in my soul promote any other Discord, paid or free. But Buffalo Chuck's a Mastermind student. That whole thing is run by Mastermind students. He has, and it kind of, to be honest, it probably benefits me because everyone just talks about themselves enjoying the Mastermind, right? But he does a book club on Reading Price Charts Bar by Bar. And if you're having trouble with the book, maybe reading it in a group might help you out, you know. So Buffalo Chuck, everyone knows what to find. It's actually his birthday today, so also happy birthday, Buffalo Chuck, right? But the first sign of a potential trend day, right, is the first bar of the day being a trend bar, especially if it's a big trend bar, right? And when I say first bar, I'm going to edit that to say first 5-minute bar, right? Al Brooks did a deep dive on 5-minute charts, right? So is reference to a 5-minute, right? So here we see a strong ass trend bar from CRM close. And for me, that was the sign of like, oh, all right, we might not get this level test. I'm going to have to put some risk on this on the first opportunity that I get, right? Right. So bar 1, we get that big green trend bar, right? And then we get, which gives us the sign to be looking for pullbacks and buy setups, right? Now, bar 2 of the day here, right? We have bar 1, bar 2, bar 3, the first 3 bars of this day, right? We have a trend bar, kind of a rest bar, and then in the third one, we do have a little bit of a pullback bar, right? Kind of signaling to us to potentially be looking for a pullback. But we do have essentially a 1, 2, 3 pattern in place here, right? Now, it wasn't the cleanest of 1, 2, 3s, but you then use multi-time frame analysis, right? And you can see, right, that it was actually a very clean 2-minute buy setup, right? Right. So one thing I will say is that while I made a lot on CRM today, I actually, truthfully, I wanted to make more because if we had gotten a pullback to this level and then gotten the buy setup, I would have used more risk. Right. I felt comfortable taking this. We still had levels as a reference point, this 200.02 as the target and the break and hold above this 197.21. So we had the level as a reference point, but if we had gotten a level retest, I would have put on even more risk and I probably would have put like my absolute max position size on it, especially given that we were seeing ES hold the level at the time. But here we see the 5-minute attempt to get that pullback, which gives us that 2-minute buy, right? Which is where I believe the best entry of the day was. Here we get 3 straight green 5-minute bars up. But if you miss that first entry of the day, within these 3 trend bars, they actually offer another 2-minute buy setup. Now, if you're taking this 2-minute buy setup, I think you're probably using more hit and run mentality, right? And at the spike to 200, you're probably all out, right? You're not holding this because you don't have the best entry in the world. You're buying in the middle of a 5-minute green bar, right? That's not a buy setup, right? So I do think there was potential hit and run entry. Let me adjust this. I do think that we have, so bar 3, or let me do bar 4 here. All right. Bar 4 here triggers that 5-minute buy, right? It is right into high of day, but the break above that candle does go from pullback to buy setup, right? So bar 5 there, actually then it's crazy, right? How if you think about it, right? Like between this initial wick that this CRM had, this wick up, right? Between that initial wick and this next candle's wick down, right? That the process of it leaving that little 5-minute upper wick and then having that little 5-minute lower wick is actually what allowed this 2-minute buy setup to occur. That's the part of charts that just fascinate me to the most, right? Is I'm constantly asking, okay, why is this occurring? The other time frames usually have the answer to that, right? So here we see bar 6 with follow through, right? Follow through task continuation. Now, I have a question that I'm curious about if anyone can guess the answer to this, right? And I'm not sure that anyone is going to, probably not, to be honest, but I'm just curious, right? We have a level here at 200.02. So my answer isn't the level, right? But what is one thing about bar 6, right? And you could even think about it as the combinations of bar 4, 5, and 6. But what is one thing about bar 6 that makes it a little bit interesting in the sense? And again, bar 4, 5, and 6 continue. Is there anything that kind of stands out to you about bar 6? And I'm not talking about the test of the level or the wick. You have to think way out of the box here. Way out of the box. This is not an answer I'd expect people to get, but I'm just curious. No lower wick, strength, no pullbacks. So all correct, but nothing that I'm necessarily looking for, right? Here, what I want to think is interesting, and again, I talked about how bar 4, 5 also played a role in this, but bar 6, what's kind of interesting to me is that it closes at exactly 7 a.m., right? It closes at the 15-minute mark, right? Or excuse me, I guess not. This is sloppy. Not right at there, but right? Essentially, I guess I was kind of wrong in my own answer because I wasn't looking for it to, I guess we closed on this next bar right here. Yeah. That closed at 7, right? So we didn't close exactly on the hour at the highs, right? But essentially, that's why I didn't expect anybody to get it, right? But if we were looking at this at a 15-minute chart, we have a green trend bar, and then we have a green trend bar that just leaves a little bit, the tiniest of the upper wick, right? Without knowing what fucking comes next, even though you can all see it, right? If you looked at a chart and you just saw this, you just saw these 2 green candles getting strong closes above yesterday's open, above yesterday's range. What's one thing that logically in your head, especially knowing that there's a level there, right? What's one thing you could have logically been looking for on this 15-minute chart? Consolidation, a pullback, right? Or just a 5-minute, right? A 15-minute 1, 2, 3 pattern, right? So for me, holding CRM through this pullback was the easiest freaking hold of my life. That was one that I literally did not even flinch. Right? Here's the 15-minute chart looking super strong. Here's the 5-minute chart. Not only on this pullback are we not really making any real downward traction, we're not even breaking the low of this big green bar right there, right? But we're making no real downward traction. But knowing that I'm watching multiple time frames, staring at this 15-minute chart, all I can think in my head is, we're just 1, 2, 3 on the 15-minute. This is setting up a pullback for a buy setup. And the 15-minute is setting up a 1, 2, 3. Now, of course, that could have failed. That could have not worked, right? And I had my sort of plan in place mentally as to where I was going to trail that, which was actually, pretty far down here, right? But for me, the whole time that I was staring at this 5-minute chart and at this chart in general, I'm just thinking in my head, gosh, wouldn't a 1, 2, 3 pattern just make so much sense right now? Like so much sense, right? And of course, I'm not trying to, I'm not trying to flex on it or anything like that. That is what happens. That is what ends up happening, right? So here, bar 7. Right, so bar 7 here initiates the pullback, right? We have the red bar kind of at the level. Again, we also have this, really what initiates it is the break beneath previous candles low there in bar 8. So I'm going to say bar 7/8. What's an multi-time frame analysis clue that we can take away from this pullback at bar 6, 7 is that the 15-minute is simply 1, 2, 3. Right? Right? The 15-minute is simply 1, 2, 3. Again, pretty clean here. We have bar 7, bar 8, bar 9. Here's bar 10. Right? Or let me say this. Bar 10, buy setup. Right? Again, we have this 200.02 level here. It's not surprising that once we tap that, we get a little bit of a pullback, right? But would I be okay with you having taken, and even if it was a hit and run entry, taking an entry here, right? Even though we were beneath the level? Yeah, right? that makes sense. We have the 15-minute 1, 2, 3. We have the 5-minute buy setup anticipating a level test / level break, right? From there, we get a rally up. This 201.68 level was a little bit funky. It was from back in the day, so let's don't worry about it too much for now, right? But ultimately, from there, we get a just continued trend, right? So we have bar 10, bar 11, bar 12, bar 13, bar 14, bar 15, bar 16, right? Initiates pullback. Right now, one question I know people will have is, how did I hold through this failed buy setup right here? Right? Because in theory, bar 18 triggers a buy, right? That's not what I wanted to do. Okay, hold on. Okay, bar 18 triggers a bar here. Bar 18 triggers a buy here. This is a crazy valuable video. Good Lord. Bar 18 triggers a buy here. Give me some guesses on I'd like two reasons why I wouldn't be super interested in taking this buy setup at bar 18. Two reasons, and they're not definitive, right? But maybe the think of it more as, give me two clues or such that would have that pay bar 16 is a little aggressive. What would we be looking at? One, okay. Whoever said strong bear trend, Randy, I think you mean strong bear trend bar, right? And that was some of the other answers that I would have, right? Is that perfect, right? That's the first answer I was looking for. This is a pretty aggressive bearish candle there, right? I don't think that's the kind of bar that we can reverse in just one candle, right? So first answer, I'm gonna put why skip. Right. So one of the things that I want to note here is that while multi-time frame analysis, the way that people most often think about multi-time frame analysis is they think of it because their brains are trained in this top-down sense that you like I want the weekly to be an uptrend, I want the daily to be an uptrend, I want all this. And you're not wrong. All of those things are definitely preferable, ideal, dream world, all that. But there's this other part of multi-time frame analysis that's a little bit less focused on, right? Which is like intraday, you want your 5 and 15 to be aligned for sure, right? So right here during the bar 18 5-minute buy, let's take a look at what this 15-minute was doing. All right, let's see. The 15-minute had just put in a bearish engulfing pretty much, right? The 15-minute had pretty much just started its pullback, right? So unlike this buy here at bar 10, we're cool with that, right? Because we're anticipating a level break, level retest and break. And there's a 15-minute 1, 2, 3 in place. Here at bar 18, right? The 15-minute is just starting to get that pullback, right? That's not the time typically that you want to be longing, right? You would rather wait a little bit, right? So then we can also see here what is it? Bar. No, this is bar 19, 20, 21, bar 21. So, okay, we just talked about how we would skip the buy at bar 18. And one of the first reasons that we listed is because it was such an aggressive bar right there, bar 17, right? I'm going to add that to my notes right here. So we just noted, right, that, hey, we're going to skip the bar 18 buy for all the aforementioned reasons. But, right, now thinking logically and without paying attention to what happened again, if we're in our heads thinking that, hey, we're still going to hold, this trend is super strong. I don't think we're just going to erase this move and start selling off there, right? But still, this is a little bit too aggressive to buy into. What would we be then looking for, right, in order to remedy that, right? And in my opinion, a failure to go lower, right? That 5-minute failure to go lower, the same way I asked you on ES, why did that first candle of the day or that second candle of the day do what it did? Why did these 3 candles do what it did? In my opinion, these candles did what they did in order to get the 15-minute chart enough of a pullback where it could trigger a buy. Right? From there, we get a clean trend continuation into level. We get a little bit of a test of the level, then another pullback. Then we get a break above the level, another series of kind of pullbacks and dicing around, and then get a break and follow through trend up here, right? Before ultimately, I don't know exactly what bar this is, but I'm just going to call it bar 30. All right. Now, there are a few different times where we saw a harsh red bar, like here. We saw a harsh red bar, right? But right here, bar 30 is the biggest bearish candle of the day. That's a pretty aggressive failure, right? Even this kind of 2-bar pullback here, it looks ugly, but in reality, it's not that ugly of a candle. This is a pretty ugly bearish engulfing that wipes out like several former bars, right? So here, bar 30, right? Bar 30 equals I'm over it bar, right? By bar 30, I think you're done with this name, right? And you're kind of like, all right, I've extracted as much as I possibly can, close the runners, we're good for the day, right? Now, there are a couple of other buy setups that you could have taken, like right here. In theory, one triggered right here. In theory, one triggered right here. But at that point, for me, you're probably chasing a name that's pretty damn extended on the day. And none of those 5-minute buy setups aligned with the 15-minute, right? So the really nice part about this buy setup down here at bar 10, right, was that in addition to still having more room to run to the upside, the other appealing part about this buy setup is that the 15-minute chart was aligned, right? On these subsequent buys up here, the 15-minute looks okay for longs, but it's not necessarily what you want to be using as your method of entry, right? This 15-minute 1, 2, 3 is clearly the cleanest setup, so to speak. This is clearly the cleanest buy setup, right? But this is personally how I would have gone through each individual part of this chart. So let me go ahead and screenshot this and move. So let me move this down here. We're gonna do one more thing, two more things total on the day, and then we're gonna let you guys. I said this was gonna be shorter than, you know, here I go, fucking ranting for an hour. Okay, and then finally, one thing that I would like to note is that I made a note here, signs of a trend day. And one sign of a trend day is the first 5-minute candle of the day being a trend bar, especially a big trend bar. And I'm going to add another note there. Especially a big trend bar with a level in the area. So this worked to the upside today. Did it work to the downside? Yes, it did. All right. PayPal with a gap down. It had a level at like 69.76 or something like that, which I don't even think it retested. I think it just slammed down. But PayPal would be an example of a name that was weak, gapping under a level in this first 5-minute bearish bar of the day. Was so harsh and so bearish that it ended up resulting in a trend day to the downside, right? So just another example of how powerful that first 5-minute candle of the day can be when examining potential trend for the day, right? So with that being said, that was hands down our thickest bar by bar lesson yet. Everybody feel free to turn your cameras on if you want to for 1 second. I always like to do this on these bonus lessons. Say hi, just say hi. You don't have to, but if you want to, I really thought that was, and let me do